My name is Gary Kawada. I'm a CPA and tax attorney practicing in Los Angeles, California, and welcome to IRS Masterclass Podcast number 5. Today I thought we'd go over the initial interview questions that agents ask during an examination. I thought we'd go over the individual interview questions as well as the corporate initial interview questions and answer the question whether a taxpayer is required to submit to an in-person interview. So the purpose of the initial interview is for the agent to gather background information, understand the accounting records and system for recording income and expenses, and to understand the taxpayer's lifestyle to get a financial profile of the taxpayer. By asking the interview questions, the agent is trying to determine who is responsible for the entries on the tax return and to identify potential issues that may lead to adjustments. There are no wasted questions. Each of the questions in the interview is used to secure and document information that will assist the agent in determining whether the taxpayer correctly filed income tax information returns and payroll tax returns, and to nail down who is responsible for any discovered errors and/or omissions. Many of the questions focus on the material items of any business return, that is, income, gross receipts and accounts receivable, cost of goods sold, purchases, and ending inventory. The agent's job is to determine the correct tax liability. Therefore, a considerable number of questions relate to sources of income, both taxable and non-taxable, which will assist the agent in preparing a bank deposit analysis or BDA. The bank deposit analysis is the number one test the IRS uses to determine if income is correctly reported. We will go over the entire bank deposit analysis and defenses to the BDA in another podcast. The balance of the questions in the interview relate to internal control, checks and balances over cash, sales, and purchases. It is critical that the agent understand the flow of documents used to record income and expenses. The initial interview is a critical part of the agent's audit and, if done artfully, can reveal an in-depth financial picture of the taxpayer. The questions are a starting point, and there are always follow-up questions that an experienced agent will ask. The initial interview, again, is a critical part of any IRS audit. The answers potentially can lead to the agent pursuing certain tax issues, adjustments, and penalties, or if done artfully, can eliminate them. Therefore, the taxpayer should be prepared ahead of time. In a recent case, the agent asked the taxpayer if he cashed checks, and the taxpayer responded truthfully that he did. The agent then followed up with the check cashing company and followed a third-party request for information. It was determined that the taxpayer cashed millions of dollars of checks over a number of years. Unfortunately, the case was referred by the agent to IRS criminal investigation for further development and later recommended to the Department of Justice for prosecution. This leads us to the question of whether a taxpayer has to submit to an initial audit interview, and the answer in general is no. Although the agent prefers to meet with and interview the taxpayer personally, IRC Code Section 7521C states that a taxpayer is not required to meet and subject himself to an interview if someone with knowledge of the business can respond on the taxpayer's behalf in a timely manner. Therefore, a taxpayer does not have to attend the first meeting and is not required to be personally interviewed. Let's talk about the corporate initial interview questionnaire. The corporate initial interview questionnaire is used as an information gathering tool by the agent to understand how the business operates, to determine the company's internal controls, and to secure background information on the corporation, its related companies, and the company's officers and shareholders. The corporate questionnaire is more issue-driven than the individual questionnaire. That is, the questions are used to probe and to develop specific issues such as unreported income, constructed dividends, accumulated earnings tax issues, unreasonable compensation, and penalties. Because the corporate audit not only focuses on the income statement, that is income and cost of goods sold, but is more balance sheet centric, where the agent audits assets, liabilities, and owner's equity for issues. The corporate interview questionnaire contains the questions the IRS agent will ask during the first meeting. The questions have not changed much since I was an agent, other than added questions related to the Dirty Dozen priority issues discussed in another podcast, although in general there's more emphasis now on agents identifying international issues such as pricing issues between related companies, foreign ownership of related companies, and foreign bank accounts maintained by a taxpayer. In conclusion, you should carefully consider whether you have your representative appear and handle an initial interview on your behalf. If you want to obtain a copy of the initial and corporate interview questionnaire, please go to my website, www.garykuwada.com, GaryKuwada.com. Thank you very much for spending the time to listen to this podcast, and I look forward to presenting more information to you in the next one.